Hey business owners, did you know that some of the best tax strategies that are used by the wealthy, the top 1%, are also available to you as a small business owner, as an LLC owner, as an S Corp owner? In this video, I am going to break down these strategies so that you can start implementing them now. But before we jump in, I'm gonna need you to like, comment, and subscribe because we can't afford to miss out on this wealth building information. So go get after it. Tax-deferred accounts is one of the best wealth building strategies that a lot of wealthy individuals utilize. Tax-deferred accounts include things like setting up an individual IRA, individual retirement account, setting up a deferred 401k plan, setting up a SEP IRA as a business owner. Allow me to explain to you how that works. When you invest your money, where you take money and you set it aside prior to getting your paycheck in a 401k plan, after getting your paycheck, if you set up your own IRA or a simple retirement type of plan, you are allowed to take that amount off of your income. Therefore, if you made $50,000 and you were to put, say, $5,000 in your IRA, that means you've automatically dropped your taxable income to $45,000. It is like you have cut your federal and state taxes and you're instantly making that much money back in your pocket in terms of percentage of your tax. This is what wealthy people do. But a lot of you may be thinking, well, I don't have that type of money. You don't need to have a lot of money to start using tax-deferred accounts. Did you know you can set aside $50 a month, $100 a month, $25 a month, $1,000 a month? Just start, and you are going to see how it's going to benefit you. Two ways. Number one, you're going to reduce your tax bill. And number two, you're going to get the compounding effect of that money just sitting there and growing, sitting there and growing. Imagine if our parents had started us off with an IRA of $20 a month when we were little, and we didn't even know about it until we grew up and we're 18 and 21 and 25, and we've had 25 years of our money compounding. We wouldn't even be having this conversation. Let's keep it real. That is why I want you to do that for you and your family. So tax-deferred accounts are the way to go. Roth IRA conversions are another sweet spot that the wealthy use. Allow me to explain how a Roth works. A Roth means that you're setting aside money for retirement that is not tax deferred, that you're not going to get tax savings on right now. And you might be thinking to yourself, well, why would I want to do that? Allow me to explain how that works. When you are putting money into a Roth, that means that you're thinking ahead. You're thinking about paying tax on the seed, not the harvest. For example, if I set aside $500 today and I set that money aside in a Roth, I'm still going to pay tax on that $500 because it's not tax deferred. However, later on down the road, when I pull out that $500 and get ready to use it, and that $500 has grown to $5,000 or $10,000 or $50,000, I'm not gonna pay tax on the $50,000. What you say? That's right. I'm not gonna pay tax on the $50,000. So you're thinking about tax on the seed and not the harvest. So if someone was to say to you, Carla, I'm gonna give you $500 today and you can pay tax on that $500, or if I give it to you today and you pay tax on it, you won't pay tax on the $50,000. Would you want that $500 today? Yes, you would. So having a Roth is important, but learning how to manage a tax-deferred account with a non-tax deferred account like a Roth is mission critical because you can have both and I want you to have both. Just know, traditional IRA, you do not pay tax today. Regular Roth, you pay tax today and you alleviate tax tomorrow. You can have both like the wealthy people do. As a business owner, understand the concept of income shifting. Wealthy people do this all the time. Let's take an example of a family. Let's say, for example, have you ever seen a family on TV, has a business, and they have all of their family in the business? Why do you think that they do that? They're doing that because they are income shifting over to their children, other family members. Allow me to give you an example. Let's say in my business, KDA, I employ my sons, even when they were little. Instead of me taking all the profit and being taxed at my income tax rate, I shifted the burden of tax over to them, but they're in a much lower tax bracket. Therefore, I'm not paying at the highest tax bracket. They're getting business experience and they're paying at the lower tax bracket. That is why you always see these wealthy people getting their families involved in business. A lot of us sit back and think, oh, isn't that cute? Their whole family's there. Most people don't do anything without a tax spin. So understand that income shifting allows you to move income into a lower tax bracket. You can do that with family members or you can do that with multiple entities. Bottom line is you now know that you can do it. Charitable trust. This is another great way to reduce taxable income and be charitable. And charitable trusts are not just for the wealthy. Charitable trusts are for anybody that wants to be charitable, wants to have a trust, and quite frankly, reduce their tax bill. You can set up a charitable trust, and when you donate your cash or property to your charitable trust, yes, you heard me, your charitable trust, you're getting a tax deduction and the trust or the charity is not paying tax. You heard me correctly. You're getting a charitable deduction and the charity is not paying tax. Allow me to give you an example. Let's say, for example, I open up a charity or I open up a trust and I donate my money to it. I can donate my real estate to it. I am going to get a deduction for the fair market value of my real estate on my personal return. I own a house. Say that house is worth $100,000. I donate it to my trust that's going to stay in my family. I'm getting a $100,000 tax deduction for that. And the great part of it is the law. The great part of it is it's going to stay in my family and we're going to build wealth by using the tax code. It's so incredible what the tax codes can do for you once you understand it and realize that charitable trusts are for you too. Tax loss harvesting is another great strategy that the wealthy use that you should be using as well. Tax loss harvesting is where you are looking at your portfolio, whether it's stock, whether it's your investments in a mutual fund, whether it's your investments in real estate, whatever it is. And if it's sitting at a loss on that particular day, you're gonna sell it. You're gonna sell it so that you can take advantage of the loss on paper. And then you're gonna turn around and buy it back at least 30 days later. Why do you do it 30 days later? So that you don't get yourself into a tax slinky, because the law says wait 30 days so that you can buy back your stock, and that makes it legal. That's why a lot of companies sell off their poor performing stock at year end so that they can get the benefit of the laws, and then they turn right back around and buy it back in late January. Understand that you can do the exact same thing and not lose your position in the market. Understanding advanced tax strategies, and that you can use those advanced tax strategies even if you say to yourself, I am going to learn one and I am going to implement one this year as a goal. You're going to be far better off, because educating yourself from a financial tax perspective is one of the keys to building and retaining generational wealth. So I want you to start doing what the wealthy people do. I want you to start using deferred tax accounts. I want you to start using charitable trusts. I want you to understand that you are also going to be like the top 1% and start using these advanced tax strategies, using tax-deferred accounts like IRAs and 401ks, understanding Roth conversions, understanding charitable trusts, understanding tax loss harvesting, understanding income shifting. Take one, learn it, implement it, get it under your belt, and then learn another. Now that you know better, you got to do better. I want you to go out, become wealthy, learn a strategy, like, comment, and subscribe so you don't miss out on any of this wealth building information. Now, go get after it.